We've hit a bit of a brick wall within the crypto space over the last few weeks, so now is a good time to reassess, reanalyze, know when we're right and know when we're wrong. So we're going to go over traditional markets, we're going to go over Bitcoin, and of course, altcoins. And we're going to go through this step by step together, starting off with Bitcoin. It is the least risky asset within the crypto space. That's why we need to assess this first. So first and foremost, what's happened on Bitcoin? We've got a big rejection level. This was its previous high from the bull market high of 2021. This was the bear market low. And you can see we've kissed the 61.8% retracement. We know that this is the golden level. We know that this is where the bulls and the bears are going to start a fight. The bears have got their sell orders in there, and the bulls that have rode this all the way up to the 618, that have also got sell orders in there. So what does that mean? It means the bulls become the bears at this point until we get further confirmation. How can we look for further confirmation? We know that a trend, once we've had 3 touches on a trend, the trend's intact. We've got 1, 2, 3 touches on this trend, 4 touches on this trend. We broke to the downside. So that in the short term is bearish. What we need to happen is we need to regain this 50% level, and we need to regain trend, and we need to rehold this 50 moving average. We haven't broke below there yet. If we do break below the 50 period moving average, you're likely to come back and test this next level, which is the 382 retracement at 35,000. And also you've got your 200-day moving average sitting at 32,000. So all eyes on this. To simplify it, over the next couple of days, we need the candle to close back into trend, close back above this 0.5 area, and that's going to show strength in Bitcoin, and you'd expect the crypto market to follow. So the next one's the DXY, the dollar, strength in the dollar against another bag of fiat currencies. We've rejected at the 382. You can see that price popped its head above the 200 moving average, and then it rejected from the 50 period moving average, and we're closing now below the 200. So that's showing strength. Why does that show strength? Because it means that people are coming out of the dollar and going into least risky assets, more on-risk assets, should I say, which in this instance would be pound, yen, euro, that kind of thing. So the gist of it is, when the world is in trouble, people flood to the dollar. People think the dollar is the least risk asset. Don't know why they think it's the least risk asset, the way that they print money left, right, and center, but that's just the way it works with traditional markets. So we want the DXY to close below the 200 moving average. We want it to close below the 382 retracement level, and then we want it to push back to the downside to test these lows. These lows are sitting at 100, so that's where we want to test, and that's what we want for the crypto market to run. S&P 500, why does this matter? I'll show you why it matters, because the S&P 500 is making new highs at the moment. That's strong. It means that people are risk on. When the S&P 500 is making new highs, it means that people are flooding out of the dollar, going into investments. So that's strength in the S&P 500. The US 10-year treasuries. People keep talking about the US 10-year treasuries, and what we want on the US 10-year is a pullback. We've had a decent pullback here. We've lost the 50 period. We're losing the 20 period if we manage to close just below here, sitting at 4.085%. And that, in the short term, will show strength. What we can do is put a fib level on there, see if it rejected at 382. Hasn't touched the 382 yet. Doesn't mean that it's not going to, but it's tried to test the 382. It managed to get rejected from the 50 period moving average. And again, on the US 10, what we want is a move to the downside. Move to the downside, test this 200 moving average and see how price reacts there. As far as the Bitcoin dominance is concerned, we wanted this to move to the downside. We said that it rejected here. It's going to come back and it's going to test. This is where the tug of war is going to happen between the bulls and the bears. And in this instance, the bulls won. So that means more money is going into Bitcoin. That means that people are getting a little bit risk off, and they want to stay in cryptocurrency, but stay in the least risk cryptocurrency. So you've got this big green God candle here that's pushed price back into trend. And of course, what we need is to see how price reacts there, and ideally pull back out of trend to give the altcoins a chance to run. So the same for the USDT dominance. We've got a rejection at the 382. From this swing high to the swing low, rejection at the 382. And what we want is that rejection to hold. You can see, if you haven't seen my video about how you can tell whether a candlestick's strong, weak, or medium, take a look at that. This, although it's a green candle, we said a green candle, it's closed above the open, so it's green, although price at some point has pushed all the way to the 382, and then the bears have rejected. The sell orders have pushed price right back down to here, and then that's followed by a red candle. So that's showing that we've got a bit of rejection there at 382, and that's showing strength for the crypto market. We want a pullback in the USDT dominance. We want people to sell their USDT and go into higher risk assets for this to move to the downside and for crypto to move to the upside. So the same with the total market cap. This is the total market cap, including Bitcoin and Ethereum. You can see we've had a pullback. We need to hold this. We need to hold the 50-period moving average. And how much of a retracement have we had here? This is a protection video. This is where we're wrong and where we're right, how we can analyze and how we can protect ourselves if we're wrong. So you hold in the 382, these things are magic numbers. 382, we know that that's a strong trend. If this moves to the upside and creates that higher close candle above this, that's showing strength for the total crypto market cap, including Bitcoin and Ethereum. So we need to hold the 382. We need to close above 1.592 trillion, and then we can try and test these highs again. Right, gold. Why is this significant? See, gold has tried. It's been bouncing on this ceiling. It's been bouncing on this ceiling since just after COVID. So this is August 2020. This is March 2022. This is April 2023. This is November 2023, and we're trying again. What's the significance of gold breaking out to the upside? It's never broke above this level and closed above this level in its history. A close above this level will show a big surge to the upside in gold. What does that mean? It means that fiat currencies are weakening. In times of war, in times of uncertainty, in this most recent case, in times of pandemic, people flood into other assets, and gold is one of the assets that people flood into in times of fear. In my opinion, gold's stronger than the dollar because it's got more collateral to back against it. But however, that's just my opinion. So all eyes on the gold breakout. That, in the short term for gold, if we do break and close above 2079 is going to be really bullish, and you should actually see a surge in gold on the back of that. So we'll flip back to crypto now. Total market cap, excluding Bitcoin, excluding Ethereum. We talked about this in the last ICP video. We've held the 382. This is an important level. If we don't hold 451 billion, we're likely to go back and test our previous support at the 0.5 level of 425 billion. So in the short term, it might look a little bit nasty on your portfolio, but this 0.5, if this holds, it's not going to be too bad, because remember, what we do is we wait for the break, confirmation that the bulls have regained momentum in the short term, and we're flowing with the money, we're swimming with the whales. So that's what you can do on the total 3. That's excluding Bitcoin, excluding Ethereum. And then we can look at the total 2, which is very similar. This one is just excluding Bitcoin. So it's total market cap excluding Bitcoin. This one's currently holding its 382. It's held support on its 50%, on its 50-day moving average. It's held support at the 382. So that's pretty bullish for the total 2. Although you have this nasty pullback, anyone that's been in crypto for a few years knows that that nasty pullback of a whopping 15% in the whole of the crypto market, excluding Bitcoin and Ethereum. That means portfolios have dropped on average 15%. Anyone that thinks that's bad hasn't been within the crypto space that long, because in comparison to what we've been through over the last few years, that's nothing. Right, okay, so Ethereum trading against USDT. We've got our support band here. Our support band is sitting between $2,096 and $2,154. Again, it's held the 50-period moving average, and again, it's probably tested its 382 retracement. A little bit lower, actually. It's dropped the 382 retracement in this instance, so it's a little bit more bearish. We've dropped the 382, we've held below the 382, and then the bulls are trying to regain this level. So level to hold, the support level is 2164. Break and close below the bottom of this band at 2098 means that we'll be likely to see lower levels. So this is where you protect yourself, and this is where our support band is. So all eyes on that, add it to your chart, keep your eyes peeled, and you'll see when price comes back to this level here, the tug of war battle happens again. How can you protect yourself in a tug of war battle when you've got sideways action, you've got buy orders and you've got sell orders, and you don't know which way it's going to go? You've obviously got tight stops, because if you're long, you can apply stop losses below the low. If you're short, you can apply stop losses below the top. And it's a short stop losses, it's tight stop losses when you're trading in a short range. So that's something to keep your eyes peeled, and that's how you can take advantage of these levels. It's how to take advantage of protecting yourself. Right, Solana, this thing has absolutely surged during the bear market. It's already done about a 10x. Where is it from its previous swing low to its swing high. It's hovering above the 38.2% retracement. As far as price action is concerned, from its top to its bottom, that's going to be an important one to measure on Solana. From its top to its bottom, you can see Solana's pierced through its 382. It hasn't managed to hit the 0.5 retracement at $135, but let's have a look on Solana. But yeah, it's rejected the 382, guys. So it's rejected the 382. Price action's pulling down. In the short term, what we're looking for is to track the trend, wait for the break. Hopefully this area is going to hold as support between the $75 and the $79. If that holds as support and you get a bit of sideways action at this level, wait for the break, boom, on your way. Bulls have regained momentum. Try and take out this high and carry on moving to the upside. That's Solana. What about Avax? Avax. This thing's another one that's absolutely went parabolic already this year. So swing low, swing high. It's holding its 0.5. It's holding its 0.5% retracement there. So this is the area we need to hold. And we've got two areas of confluence. You've got your 0.5 sitting at $29.36. And you've also got your 50 period moving average sitting at exactly the same level. So that's why the support's held here. What do we need in the short term? Higher high, higher close candle, take out this high and bring it back into the 382. So that's what I'm looking for. And remember, just track the trend down, wait for the break. Easy as that, easy as that. Fetch.AI. We've dropped the 50% level. We've held the 50 period moving average, and we're in the middle of the 382 and the 0.5% retracement level. So what does that mean? We're in no man's land at the moment. So price is either going to do this. It's going to come back down. It's going to drop the 50 period moving average, test this 382, or what's more likely to happen is price is going to push back up here, and then the tug of war battle is going to happen at this 0.5 level. So we can stick a trend line in there, and you've probably got a bit of double confluence there. It's looking like you're going to get rejected at this level. So price is going to push up. We've got a rejection here. We've got a rejection here, and then you're likely to come back, test the 50 period moving average. Is this where we're going to get the break? Significance of the break, the significance of the break. Remember that. Dogecoin. What about Doge? We've done a video on Dogecoin recently. We said this bull needed to hold this level, which is sitting between 7.5 cents and 8.5 cents. We'd actually broken out, and you see this here. You'll see this time and time again if you're looking at trends. 1, 2, 3. It's called a 1, 2, 3 fake out. 1, 2 touches, you can identify a trend. After 3 touches, your trend stands. And what tends to happen is at the third touch of a trend line, the bulls and the bears fight, and you get that fake out, and price often gets pushed back into trend. So we're back into trend now. Price is hovering above the 50 period, and it's hovering above the 200 period. We're waiting for a break of the 50, a break of trend, confirmation, boom. Test the previous highs. Previous highs are sitting at nearly 11 cents. And then the last one is XMR Monero. I've had a few trades on this XMR Monero. It's trading in a range. Okay. How can you take advantage of a range? Simple. We're going to join the dots. We're going to join the highs. We're going to join the highs, and then we're going to join the lows. And you can see you don't want to be taking anything in no man's land. We're creating a bit of a wedge here. Anywhere at the bottom is support. Anywhere at the top is resistance. So you need to respect that as resistance. And you need to respect the bottom as support. So as far as a buy entry is concerned, wait for price to pull back. This area has held once, twice, 3 times, nearly 4 times, 5 times. So you'd expect this trend to hold. If it doesn't hold, what does that mean? You know where your stops are. Tight stops, little loss, take advantage of lower levels. So that was a bit of a deep dive in the whole of the crypto space, macro markets, as well as the dominance. Hope you enjoyed it. If you want more like this, let me know in the comments and I'll be happy to.